Hi, this is Roger Conrad. I'm editor of Canadian Edge newsletter. What I want to talk about today is just a couple of larger issues that have affected our share valuations the last couple of weeks. And the biggest of these is the Canadian dollar. As we've discussed several times, the Canadian dollar is very much a resource proxy for currency. So when oil prices go up and down, as they have mainly been going down recently, the Canadian dollar tends to get hit in a negative way. Now, this is in spite of the fact that they have a very strong banking system, that they're very strong in terms of investor regulation. We've seen a couple of very nice things happen there. For example, the restrictions on, or the real benefits to the renewable energy industry that have been triggered by some of the mandates on coal, and we're going to be discussing these in the July issue in more detail. But this is extremely bullish, again, for the renewable industry and energy industry. It's also kind of bullish for energy producing companies as well, because of the flexibility that's been built in. So, Canada has done things like defend its other companies based in the country, such as First Quantum Minerals, in a dispute in Africa. So again, this is a very positive thing for the country. It's a very positive thing for the currency. And then, of course, you have the fact that economic growth has been picking up around the country as well. So all these things tend to boost a currency. Unfortunately, in the near term, what people have focused on are the resource prices, and that's taken down the value of the Canadian dollar, and it's taken down the value of our holdings, even though in Canadian dollar terms they've remained fairly stable. Now, how does that affect you as a U.S. investor? How should you respond? Well, again, the most important thing is the underlying businesses of these companies. And as you'll see in the July issue of Canadian Edge, these companies are healthy. No fewer than a dozen companies announced some major strategic moves over the past month, and these moves will increase cash flow going forward, and that, of course, is the underlying bedrock for all dividends, dividend safety as well as dividend increases. I think once we see this conversion wave end, as companies that are now trusts become corporations, we're going to see dividend growth resume up and down the line. And we have a very positive story to tell here with these companies, again, that have very strong underlying businesses. You look at a company like Atlantic Power, which I'll be focusing on in the July issue, making a major investment in a wind farm. Kind of a departure from some of the other power projects they have, but meets the main criteria, which is it's accretive to cash flow in both the short and long term, and that's accretive to distributions. And you might recall that, as we pointed out, they've pretty much done the math where they can maintain the same distribution through 2015 without any projects. This is a new project, so again, I expect to see, as more guidance comes out from the company, that they extend that horizon based on this deal as well as some others that are in the works. So again, very, very positive moves being made and indicating underlying strength of these companies and indicating that the distributions are safe. So while I prefer to see a rising Canadian dollar, I always like to see the prices of these companies go up. This particular moves that we've seen in the Canadian dollar, which is translated to lower prices for some of our recommendations, it's a temporary thing. It's also a good time to pick up some shares if you are light in any of our holdings. So that's basically what I have to say today. Again, I'll invite you to take a look at the July issue. That'll be posted on Friday, July the 9th, and we'll look forward to hearing your feedback from that. Meantime, I'll look forward to chatting with you next time.